Coming up, a special episode, what you need to know this tax time and the latest on the markets. Hi everyone, it's a daily 10-minute business and finance news wrap for this Tuesday, the 27th of June 2023. Later, the Australian share market snaps a 4-day losing streak. But first, we are just days away from the end of the financial year, so now's a good time to go through everything you need to know this tax time, including tips, the new changes, and the warnings about getting it right. So for all of that, I spoke with the ATO Assistant Commissioner, Tim Lowe. Tim, the ATO is expecting fewer people to receive a refund or smaller refunds than they were expecting this time around. Why?
Yeah, that's right, Ricardo. Look, the low and middle income tax offset ended on the 30th of June 2022. So that was about $675 to $1,500. And so if you've been for incomes up to $126,000. So that's one of the key reasons why your refund might be smaller or you may be in a debt position this year.
Okay. What are some of the things people can do right now as they prepare for July the 1st?
There's a few things you can do right now. The first thing is to go back to the 1st of July last year and look for all those receipts for this financial year. Now, if you haven't already done so, the best thing I would suggest is to download the ATO app so you're ready for next year. It's a good place to store all your receipts in one spot. The other thing you can do is also check out the ATO's occupation guides. We've got nearly 40 of them. Find them on our website and it can help you work out what you can and can't claim this tax time.
Taxpayers, though, shouldn't be too eager to lodge their annual income tax return too soon, right? Why so?
Yeah, look, we know a lot of people make mistakes. We've seen that time and time again when people rush to do their tax return. And what happens when you rush is you actually slow down your tax return. We ask a lot of questions and we'll ask you to substantiate your claim. Our best advice is to lodge at the end of July, where a lot of pre-fill information is automatically included in your tax return to make your job really easy and simple.
So can you go through some of what is pre-filled? And even though people may be keen to lodge their income tax on the 1st of July, they may need to wait until that actual lodgement is tax ready, don't they?
Yeah, that's right, Ricardo. So my best tip is lodge at the end of July, because a lot of that pre-fill information, that's information from your employer, banks and financial institutions, government agencies and health funds is automatically populated into your tax return. So all you need to do is check that it's all correct and then include any deductions you're entitled to, nothing more, nothing less. So that includes all the donations that you made during the year and any other work-related deductions that you might be entitled to as well.
Okay, so speaking of deductions, the ATO has on its sites 3 things in particular this tax time. Can we go through each of them? The first one, rental property deductions. How and why?
Yeah, look, we're seeing 9 out of 10 rental property investors get their tax return wrong, and 87% of those tax returns are done by tax agents. So what we're asking tax agents is to ask extra questions of your clients, and for clients to make sure that they're giving all their records to the tax agent. At the end of the day, the responsibility of the tax return lies with the client. So that's one thing to keep in mind. The other thing that we're seeing when it comes to those types of mistakes is people are typically claiming all their introductions, particularly when they refinance their property for private purposes. So, for example, if they're going on a holiday to Bali or buying a new Tesla for private purposes, that interest isn't deductible for that private component and needs to be apportioned.
Okay, another one, work-related expenses. What are you looking at? Because more people are now working from home, but at the same time, when people were working from home because of the pandemic, people are now going back to the office too.
Yeah, that's right, Ricardo. We know millions of Australians that through the pandemic worked at home, but we know lots of bosses have asked their employees to go back into the office. So, what we're saying to people is this: don't copy and paste your claims from last year because your circumstances have changed.
Finally, capital gains tax across many assets, but in particular, you're looking at cryptocurrencies too.
Yeah, we're looking at shares, crypto and currency and property this tax time. This time in particular, property, what we're seeing is a lot of people are renting out rooms in their homes on short-term accommodation platforms like Airbnb and Stays. And when you end up selling that property down the track, it can result in capital gains tax consequences because you've rented out a room whilst you're using it as a main residence.
Times are tougher. Cost of living is rising. Interest rates are rising. Are you concerned that people may be filling their income tax forms incorrectly as a result, hoping to maybe just get a bit more in the bank?
Look, what we say to people is this, you base your tax return on the evidence that you have and the supporting documentation that you have. At the ATO, we have supercomputers, we have data analytics, we've got data scientists working behind the scenes to review every single return. So if your tax return sticks out like a sore thumb, we'll be asking questions of you. So my advice is to make sure you've got documents, your records in place to make sure you've got an accurate return and you can get it right the first time.
What are some of the key tax changes happening from July the 1st?
Yeah, there's a few key changes, Ricardo, when it comes to tax time. First of all, the working from home rate has increased for the revised fixed rate method from 52 cents to 67 cents per hour. That's a 28% increase. And one key thing that's changed is you no longer need a dedicated workspace to access that method. So you could be working on the kitchen table, the dining table, or even the couch, and you can use that revised fixed rate method. The other key thing that's changed is in relation to the cents per kilometre method. If you are claiming work car travel, the rate has increased from 72 cents per kilometre to 78 cents per kilometre. And the other key change is in relation to self-education expenses. There used to be an exemption for $250 that wasn't deductible. You now can, that's no longer there this tax time.
Final question, Tim. Is there anything in particular that people from cold communities, culturally and linguistic diverse communities need to be aware of?
Yeah, if you're from a coal community, we've actually got some fantastic resources on the ATO website. We've got translated a lot of our tax time resources in over 20 languages. So my best tip is to go onto the ATO website and get some information from the website. You can find it at ato.gov.au/tax time resources.
Tim Lowe there, the ATO Assistant Commissioner. Now, Market Day on the SBS On The Money podcast. Well, the Australian share market snapped a 4-day losing streak. The S&P ASX 200 up 0.6%, 7,118. For more, I spoke with Joe Youssef. He is the head of distribution at Areus Asset Management. Joe, the market's up today. Why and which sectors are driving the gains?
Look, Ricardo, I think there's a number of reasons. First and foremost, the market's had a pretty ordinary run of late. It was down circa 4% in the last few trading days. I think last night's sell-off in the States too was mostly technology led, and definitely our market doesn't have anywhere near as much technology influence on it. And then I think you look today, there's just been a little bit of gravitation towards shares that have been savagely hit. The banking sector particularly has had a good rebound today, or financial services right across the board, in fact, have done well. We've had a little bit of a rebound in the resource stocks as well too, which has been pleasant and probably long overdue. And then we've had some stapled stocks like Sonic Healthcare have had a pretty good surge as well too, based upon their early morning announcement of that takeover of the Swiss company.
I guess one really big key economic event comes out tomorrow, official inflation numbers. We then get retail sales on Thursday. How is this all likely to play in the market's expectations with what the Reserve Bank is likely to do with interest rates, not only next week, but I guess going into the future?
Yeah, look, tomorrow's inflation rate is expected to be 6 to 6.1%, which is about 10% below where it was at the last print, but still significantly well above what's double what the Reserve Bank's articulated comfort level is. Look, I still think it's way too high. The irrefutable fact here, even with 6.1 cash rates at 4.1, that's still a negative real interest rate of 2%. That's not too different to when inflation was comfortably below 3% and cash at 0.1. That is still a precursor to economic hardship down the track. So my personal opinion is that they need to go and continue to go northwards until they get inflation well and truly back below 4% and close to their target range. I mean, the US has done an admirable job in halving more than halving their inflation rate. And so they've been able to pause. I don't think the Reserve Bank is in that position yet, but there's a lot of different opinions in the market for sure.
Over the weekend, we saw one new, complication with that, the Russian instability, right? I guess that also moved oil and gold prices. Overnight, they edged a bit higher. What's your take?
Yep. Look, I still think it's a false dawn with oil. I think oil, particularly with supply issues and just continued economic uncertainty, is going to continue to be under pressure. Gold's a different kettle of fish. If you look at gold, theoretically, traditionally it's a store of wealth. It's a hedge for inflation, and in recent years, up until probably this year, you saw central banks globally start to divest out of their gold holdings, but there's been a reversal this year, been an upswing in central banks, and surprisingly so, buying gold back. And I think that's testament to just how much uncertainty there is, both geopolitically and also economically. So I think gold's all-time high was back in 2020. It was just shy of 2,075 an ounce. We've tested those highs a couple of times. We haven't got there, but if you look at some of the major analysts, a lot of them are predicting gold to forge ahead and make a new high in the not too distant future. I'm definitely in that camp as well.
Youssef there from Areus Asset Management. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.